Hello everybody, Greg here from Master Trader. Quick lesson on candlesticks and range expansion candles at turning points. We had here this morning, the markets opened up lower. As you can see, I've got 5-minute charts here. They were trending down the day before, and S&P's gapped lower, and a couple of topping tails there that initially set up a down move. There was a retest, and it moved further. The Qs, which were a little bit better of a setup because they were closer to the resistance area right here. They gapped down a little bit and popped right up into the little gap fill and down, had the same kind of a retest. And the Russell here, pretty much the same kind of thing. And the Dow eventually gave it up, but didn't go down as much, so held up a little bit better. In any event, what I want to show here is the turning point. And so when we get bottoming tail bars that have tails on the bottom, usually about 50% or more of the range. Well, like this is a bottoming tail bar right here, right? That actually set the low, but it's a small bar. There isn't a lot of emotion to it. And it can be really, let's say, tricky, or you can get whipsawed on it, where it's not really a reliable setup. Whereas when you get a bottoming tail bar that's a range expansion bar, it's a much more powerful setup, because as it goes down and it springs right back up again, it communicates to us that there's a strong demand below and it popped back up. Now, when it's in a downtrend, it doesn't mean it's got to go straight up. You know, we look to the left as we always do. It hit this area here that it backed off from and pulled back. So this is a pullback pattern right here. And we had a pullback pattern on the Qs. But meaningful turns begin with range expansion bars. Now, it could be a range expansion bar that goes down initially, and then it comes right back up, where it'd be what we call a bullish 180 reversal. But it's about retracements. And it's not about fib retracements. They're useless. It's about the fact that prices went down and they retrace back up a significant amount. Sometimes it looks like a bottoming tail bar. Sometimes it looks like a bullish 180 bar. In any event, it's the range expansion. It's the emotion. It's the fact that it went down and it sprung back up again, and it has been going down for a while. We see the same thing here in the Russell. It actually came down and broke below a little bit, but this sets our bias that a turn is coming. Here with the Dow, which was actually showing some relative strength, it didn't go down as much as the others. And so when this went down and came back up again, it went sideways. Right? This pulled back, this pulled back, this pulled back deeper. This went sideways. It showed relative strength. We don't need indicators to see relative strength or relative weakness. However, we put that particular concept within trends, bar by bar candlesticks, and we haven't even looked to the left here to see why did this begin to stabilize. And well, there's a little pivot right there over here to the left. If we look at the S&Ps, this was at the bottom of a trading range. If we look at the Qs, there was really nothing. So why did it stop? Well, it stopped because the others stopped, and a lot of times markets move with others, and the Dow was sitting here on this support there. Now, how far these go up? Well, that's the unknown. They can fail at any point. You can see my charts, they have this blue line here. That's the opening price of the day. That usually acts as a pretty good reference point. This is well below the blue line. This actually got above, and this here is, where's my blue line here? Maybe it's over there. Yeah, right there. I had it covered up there. So it's well below the opening price. And the red line is the prior day's close. So I hope that helps. Range expansion bars, after a move down, look to the left for some support. That sets up the beginning of the turn. It could go sideways. It could pull back a little less. But turning points for counter trend trades. Hope that helps. Any questions, email myself, Greg at Master Trader, or Dan at Master Trader.